In this lesson, I want to show you how to detect basic engulfing candles in your scripts. So let's start with two Boolean variable values. We'll call the first one bool underscore EC, short for engulfing candle, and the other one bear EC. Now, for detecting a bullish engulfing candle, let me find an example here. Here's one right here. Zoom in a bit. So this candle right here closes higher than the previous bar's open, and this bar was bearish, it was red. So obviously a bullish engulfing candle needs to be after a bearish candle, otherwise it's not engulfing anything, or at least a doji candle. Now it's obviously up to you what kind of rules you use for these candlestick patterns. I'm just showing you my personal preference. You can of course tweak these if you want to. So you could have candles that are doji candles, like this one here. If you look closely at the open, high, low, close values, this candle here closed exactly identically to its open. So it's as doji as it gets. I don't like detecting engulfing candles after this pattern, personally. But if you want to, you can do that in your code. I'll show you how to do that later. But for now, we're just going to detect patterns like this right here. So for me to have a valid bullish engulfing candle, let's call this candle 1 and candle 2. Let me change the color of that second number to be more obvious. There we go. So we have candle 1 and candle 2. For me, when I'm detecting a bullish engulfing candle, I need candle 2 to open at least identically to candle 1 or lower. If candle 2 opens higher than the previous bar's close, the previous bearish bar number 1's close, then that is not a valid engulfing candle for me, according to my preferences in how I detect this pattern. So to detect this particular pattern you see on your chart right here, what I need to say here is I need to say, does the previous bar close lower than it opened? This means that the bar before, bar number 1, is bearish. That's the first condition of our bullish engulfing candle pattern. The second condition is that this bar, number 2, must open lower than number 1's close. So to do that, I just write here, did the current bar's open less than or equal to the previous bar's closing price? That's our condition number 2 for our bullish engulfing candles. The final condition is that the bar must close higher than the previous bar's open. So bar number 2 must close higher than bar number 1's open price. To do that, we add one more condition here. So we have, did the previous bar close bearish, and did the current bar open lower than the previous bar's close or equal to it, less than or equal to the previous bar's close, and did the current bar close greater than or equal to the previous bar's open. That gives us a bullish engulfing candle. And now if I comment out this bearish EC for a moment and we plot this onto our chart using the plot shape function, I need to pass in my Boolean series and then I need to give it a style. So for all of these lessons, I'm going to use the same style, but it's obviously up to you which style you choose. I'm going to stick with triangle up because that's the one I like for detecting patterns. I'm going to set the location to location.below bar and the color to color.green. You could also title this if you wanted to. So I could say bullish EC. And now let me clear my drawings. And when I save the script, we'll be getting a green arrow beneath this bar and any other bar that matches these conditions. So let me save my code, bring this down a bit. There we go. We are detecting simple, basic, bullish engulfing candles. Now this pattern in and of itself is not ideal because you don't want to be detecting engulfing candle patterns in the middle of nowhere. You want to detect bullish and bearish engulfing candles at price extremes. So an engulfing candle is typically a counter trend or counter momentum candlestick pattern because you are trading against the underlying momentum. So the way I like to trade engulfing candles in my own trading is either a counter trend setup, which this would be because the market is making lower lows and lower highs. So a bullish engulfing candle in this case would be a counter trend setup. But if you combine that with market structure, support and resistance, especially support on a higher time frame that has been tested multiple times as support and resistance preferably, the more times that price has bounced off this level, the more likely that it will react again in the future. And so I wouldn't just go buying bullish engulfing candles in the middle of nowhere. I would combine this with other market conditions and filters. But you need to detect this candlestick pattern in the first place before you start applying your other filters. Another way to trade engulfing candles is in pullbacks. So we have a bearish engulfing candle here after a pullback in an overlying bearish trend. So the market is in a bearish trend on multiple time frames here. Then we get a pullback and a bearish engulfing candle. Technically, this is not a counter trend trade because the bearish trend is still intact in terms of structure, market structure. But it is a setup that is printing against the short-term momentum. So we have a bullish pullback here and then a bearish engulfing candle. So even though this is in the direction of the underlying trend, it's still a reversal pattern. Now, most of you will know this if you're taking this course. This isn't a trading course. I'm not going to teach you too much about trading techniques because I'll assume that you already know that information and you already have your own preferences and styles of trading. Later in the course, I will give you some of my own personal strategies and indicators that I use to trade. But for the most part, I'm just giving you this information and you can do what you want with it. Now, the reason why I'm telling you all this is because all I'm saying is that when you detect these patterns, it's a great idea to combine them with other market conditions. So maybe you want to check if the RSI is overbought before detecting this bearish engulfing candle pattern, or oversold for a bullish engulfing. And maybe you want to check to make sure that the pattern is a swing high or a swing low. But I'll show you how to detect swing high and swing low engulfing candle patterns in the next lesson. For this lesson, let's wrap it up by detecting our simple bearish engulfing candles. And for this, it's essentially the exact same thing as our bullish engulfing candles. So I can copy that line of code, paste it in there, and I just need to flip all of my operators around. So now the previous bar must have closed bullish. The current bar must have opened greater than or equal to the previous bar's close. And the current bar's close must have closed less than or equal to the previous bar's open. So let me plot this onto the chart, and we should be getting a red arrow above, or a red triangle above this candlestick pattern right here. So let me change all of this, change that to bearish engulfing candle, change this to triangle down, this to above bar, this to red, and this to bearish. Now let's save the script and see what happens. There we go. We are getting our red arrow plotting above this bearish engulfing candle, this basic bearish engulfing candle, and every other one on our chart. As you can see, this is a common pattern in the markets, and that's why I mentioned that it's a good idea to combine other filters with this pattern. And I'll show you how to do that in the next lesson. I'll see you there.